All right, here we go again, round two. Sorry. I don't think the first one's going to be uploaded, so I'm going to do this again just in case it doesn't get uploaded. Okay, you want to play, you got to pay. That was my lesson of the day, and don't trade when you're hungover. Okay, what did we learn today besides that? We didn't get a dip last night that we were looking for. It was tough to walk in today and just close your eyes and buy them, but that's what you were supposed to do. Treasuries have been well bid again. I think we're finally starting to pay attention to these weaker than expected economic numbers. You know, I tweeted yesterday at one point, what is this, cognitive dissonance? We're like whistling past the graveyard. You know, we get the worst ISM number in, what, guys, how long has that been? Like 3 years, more? We're below 50 on the national ISM. The employment number on today's non-manufacturing ISM fell a lot more than expected. I've heard some pretty severe drops in people's expectations for non-farm payroll numbers Friday. They haven't fixed the problem. They've papered over the symptoms with Tylenol or aspirin through all this QE stuff. That's all they've done. All right, no more rants. Let's move on to trading again. We're still in the range. Volume today was okay. It wasn't great. It certainly didn't prompt, me to jump up and scream buy, buy, buy. I don't think we'll see that until Friday. The upside of the range, 129.30, 30 plus in the 10-year, 141.14, 15 on the bonds. We've been there twice. Third time's usually the charm. Next time we go there, hopefully I'll be long for that trade. One thing I do want to point out real quick is above those levels are the rollover gaps. I know where it is in the 10-year. I should look in the bonds again. I'm sorry. 129.30 plus to 130.05 plus on the 10-year is the rollover gap. Rollover gap usually gets filled. That's fine. But then the next problem, in my case, would be you don't want to see it back below the previous highs at 129.30 again. I wouldn't want to see that kind of throw-over, is what the Elliott guys would call that. Up thrust is what the Wyckoff analysts would call that. We don't want to see that. But just keep that in the back of your mind. So if you're long and the market's trading up above, 129.30 plus on the number of Friday, just move your stops up quick so we don't get back into the range again, which is a potential issue. Again today, if you look at the Wall Street Journal selling on strength, buying on weakness data, there's a bunch of bond funds on the selling on strength page. Not the top, not massive, but just enough that tells me that as the markets are rallying here, we're still seeing longs liquidating and not new longs coming into the market. So that's a warning sign. We want to be careful. Okay, tomorrow, jobless claims, ECB, Bank of England. Oh man, what else? A lot of stuff, a lot of numbers. Buy dips. Like I said, we didn't get much of a dip last night. If we do get a dip tonight, keep an eye on the 129.15 level, around the 140.12 level on bonds. If you start to see buy signals down there, maybe grab a couple just with a tight stop for the overnight session. And my young man behind here, John, is telling me that the equity trend is at a level that may prompt some type of an automatic rally in the equities and prompt a bit of a sell-off in the bonds. So we might see those levels. Have a great night, guys. We'll see you tomorrow.